Yes, VA loans don't have PMI. Yes, your payment's going to be lower. Yes, rates are better. Yes, you don't need any money down. Hey, Rick Ellendorf here, and we are talking about the 5 key advantages of VA loans, and this is number 2. Now, before you just turn me off, because I'm going to talk about something that everybody knows that a VA loan does not have, or maybe you don't, it's private mortgage insurance. So private mortgage insurance is typically a conventional type of a loan issue for borrowers that you have to have when you put less than 20% down on a conventional loan. You're required to have mortgage insurance. This is simply to ensure or provide compensation for the lender in the event that you default. Let me say that again. Private mortgage insurance is something that you pay for as a borrower that the lender requires that you get, and you're paying it in the event, just in case that if you don't pay your mortgage, that the lender gets compensated. So kind of seems awesome, right? But let me just go over a couple of things before we just kind of gloss over, is that there's a huge difference between a VA loan and a conventional loan based on, for the low money down. We already discussed in the last episode, you don't need any money down. There's little tricks and trades of that. But talking about the mortgage insurance is really an important topic. So let me just talk about it again. Conventional loans have private mortgage insurance. VA loans guarantee the mortgage. And there's a huge difference between a guarantee and insurance. So when you guarantee something, you're basically assuring that something will get done, right? You're assuring something it's going to happen. You're assuring that this loan is guaranteed by the VA. You don't pay, VA's got your back. They've got the lender's back. Whereas insurance, it's compensation that the borrower pays for. So in the same event, you don't pay your mortgage, they then have to go to the insurance company and say, hey, listen, Joe Blow didn't pay their mortgage, and here's what we're owed, and then they have to figure that all out. Let's just say this. Bottom line is that guarantee is a lot better than insurance. There's more of a guarantee. Lenders are much more comfortable with a guarantee than they are having to get insurance. Now, there's a couple of other reasons as well. Mortgage insurance, private mortgage insurance attached to a conventional loan, comes with a cost typically paid monthly by the borrower, whereas the VA loan has this built-in guarantee. Okay, so let's just say the compensation is about the same to the lender, right? The problem is with the conventional loan is that the PMI, because it's a cost paid by the borrower, it increases the cost to the borrower. So typically resulting in a additional monthly payment, which is obviously a higher payment to the borrower, which then hurts their qualifying. Also, loans that have private mortgage insurance typically have more restrictive DTI or debt to income ratios, basically meaning they're harder to qualify for. So that gets me into DTI. So probably the biggest thing right now when you're talking about PMI or conventional versus VA loans are always better for the customer. And the major reason is also that lenders want to do VA loans. The VA loan is not a loan that's really a DTI program. You probably have heard that term. Oh, your debt to income ratio is too high, or you're over 45, or you're over 43. You're not QM. I'm speaking mortgage jargon now, but this is all conventional language. Now, VA does have these guidelines too, but it's different. VA is more of we'll call it a residual income program than it is a debt to income program, meaning that they look at your overall household income, expenses, and they look at what's left over at the end of the day. They also look at assets, they look at everything, but mainly they're concerned about what is my residual income after the fact. I have seen loans that have been approved at like 60 back-end ratios or 60 DTI. Never would happen on a conventional loan. Why? Because the residual, there's a lot more going on with this loan. So again, VA is more of a residual program. It doesn't have the mortgage insurance. It's easier to qualify. It's a better guarantee for the lender in just the event of a default. It's a safer loan program around the block. So hopefully that helps clear up the whole private mortgage insurance. Yes, VA loans don't have PMI. Yes, your payment's going to be lower. Yes, rates are better. Yes, you don't need any money down. And it's better and safer for the lender. Thereby, the lender's going to do more and more VA loans. Ask any lender out there, would you rather do a lot of VA loans or would you rather do a lot of conventional loans? And they'll tell you, well, conventional loans are easier to teach, but we'd love to do more VA loans. Why? Because they're guaranteed. Thank you. Have a wonderful day.